Welcome to Big Picture Earnings Analysis. Today we're jumping right into Zscaler's Q1 fiscal year 2026 results.
Yeah, it was an exceptionally strong start to their year, closing out on October 31st.
So we're going to unpack the performance, the key drivers, and of course their updated guidance.
A lot to get into. The numbers really exceeded guidance across the board.
Okay, let's start there then. Let's unpack the scale with those key numbers. Non-GAAP revenue hit $788.1 million.
Right, which is a 26% increase year over year.
Yeah.
A very solid top-line number.
And their ARR, annual recurring revenue, that kept pace.
It did, yeah. It also climbed 26%, now standing at over $3.2 billion. But the really interesting part, the forward-looking indicator, is deferred revenue.
Okay, what did that do?
That actually grew even faster. It was up 32% year over year to about $2.35 billion.
And that acceleration tells you bigger contracts are being signed, right? Longer commitments.
Exactly. The deals are getting larger and stickier.
And on the bottom line, it looks like profitability is accelerating too.
For sure. Non-GAAP net income was $159.5 million. That's up from about $124 million last year.
But this is where it gets really interesting for me. The whole scale and efficiency story, which they've kind of captured in this Rule-of-78 idea.
Yes, exactly. So for years in SaaS, we've used the Rule of 40.
Right. Revenue growth plus free cash flow margin should be over 40.
And Zscaler didn't just meet that. They basically doubled down. They reported 26% revenue growth and a massive 52% free cash flow margin for the quarter.
You add those together and you get 78.
You get 78.
That's nearly double the industry benchmark. What does a 52% FCF margin at that growth rate even tell us about their business model?
It speaks to an incredible operational leverage. You know, that's the real sign of a high-value cloud platform.
So once they land a customer, adding more services is almost pure profit.
Pretty much. The incremental cost is minimal. Their architecture lets them monetize new products almost instantly without a ton of new spending. It's how they can grow fast and be so profitable at the same time.
And just to put that scale in context, they're now over that $3 billion ARR mark.
They are, and management was quick to point out that Zscaler is one of only 5 enterprise SaaS companies in that club that's still growing at over 25%.
That is a very small, very elite group.
It is. And their cash position underlines that stability. They finished the quarter with $3.3 billion in cash and investments.
And that's even after funding 2 acquisitions.
Right, after buying Red Canary and SPLX. So they still have plenty of dry powder for more moves.
Okay, so moving from the financials to the engine room, management is crediting this performance to 3 big growth pillars.
Yes, AI security, zero trust everywhere, and data security everywhere.
So let's unpack that first one. Which one is driving the most growth right now?
Oh, without a doubt, it's AI security. I mean, that pillar is growing over 80% year over year. It's just explosive.
And they hit a major milestone there, didn't they?
A huge one. They had a target of $400 million in ARR for AI security for the entire fiscal year.
And they hit it 3 quarters early.
They smashed right through it.
Yeah. So what's the new target they're aiming for now?
The new expectation is for that number to go past $500 million by the end of FY26.
That kind of rapid expansion, it just raises the question of why. Why is the demand so high for AI security right now?
Well, the CEO put it very clearly. AI agents are the new weak link. As companies start using LLMs and AI agents internally, attackers are using AI to automate their own attacks.
So if your core security is weak, these AI tools become a huge vulnerability.
A massive one. They can access and leak data incredibly fast. Zscaler is securing, get this, over 90 billion AI and machine learning transactions every single month on their platform.
Wow.
They see zero trust as the absolute foundation for doing AI securely. You just can't do it without it.
Okay, let's pivot to that second pillar then. Zero trust everywhere, or ZTF. This one also hit its targets way ahead of schedule.
It did. ZT is really their platform bundle that drives all that consolidation we talked about.
It covers everything: users, branches, the cloud.
Yep, all communication, north, south, east, west. Their goal was to get 390 enterprises on this plan by the end of the year.
And where are they now?
They're already over 450, again, 3 quarters early.
So this isn't just a tech upgrade for them, it's a financial tool for a CIO. They can use this to get rid of other vendors.
Absolutely. And we saw a great example of that. There was an 8-figure deal, a total contract value win with a Fortune 500 healthcare company.
And what was the use case?
They were migrating their entire on-prem ERP system to SAP Rise in the Cloud. They adopted Zscaler's Zero Trust Cloud to secure all the communication between those cloud workloads.
Well, compared to the old way of doing things.
It's a totally different architecture. The traditional way would have involved deploying tons of virtual firewalls, routers, load balancers.
Lines of work, probably.
Months of work, massive complexity, high costs. With Zscaler's gateway approach, they reduced that critical security deployment to under 10 minutes. All that legacy hardware just wasn't needed.
Management even compared this SAP tailwind to the big move from Microsoft Exchange to Office 365 years ago.
They did, and that was a once-in-a-decade kind of shift.
Yeah.
If this SAP migration is anything like that, it's a huge generational opportunity for them.
All right, and the third pillar, data security everywhere. That one accelerated to about $450 million in ARR. What's the story there?
It's that same theme again, platform consolidation. This portfolio has 8 different modules, things like DLP, DSPM, classification tools.
Things that customers usually buy from 5 different vendors.
Exactly. And they're tired of it. We saw a really telling 7-figure deal with a big healthcare provider.
What happened there?
They bought 5 of the 8 data security modules for 23,000 users. And they explicitly chose Zscaler over a leading, specialized CASB vendor.
And the reason was the integrated platform.
It was. One console to manage data security across email, cloud, web. It drives down cost, and it makes life so much easier for the security team. That message is clearly working.
Which brings us to the mechanism they're using to drive this, the ZFlex program. How big was that in Q1?
It was huge, and it accelerated really fast. ZFlex generated over $175 million in TCV bookings in the quarter.
That's more than 70% growth just from the previous quarter.
An incredible jump.
So for anyone not familiar, can you break down how ZFlex actually works? Is it just about making it easier to buy things?
It's more than that. It's a consumption model that gets customers to make these big multi-year commitments upfront.
In exchange for what?
In exchange for flexibility. A customer might commit an 8-figure TCV, and then they can just turn on new modules like asset exposure management or identity threat detection whenever they want. No new procurement cycle.
So Zscaler gets a huge, stable revenue stream, and the customer avoids having to go ask for budget every year for a new feature.
That's the idea. We saw an aerospace customer increase their annual spend by over 40% using ZFlex. They added 9 new modules all at once. Wow.
Okay, so it's clearly working as a growth lever.
Absolutely. It makes the entire platform incredibly sticky.
Now let's talk about the acquisitions that are also feeding into the platform, SPLX and Red Canary. These seem clearly tied to that exploding AI security pillar.
They are, very precisely.
Yeah.
SPLX was bought to extend their AI security posture management. It helps companies discover all the LLMs being used, and it also enables AI red teaming.
Can you just clarify that? What exactly is AI red teaming?
Sure, it's basically ethical hacking for AI models.
Yeah.
You deliberately try to break the AI to find risks.
Like trying to get it to leak sensitive data.
Exactly. Or trying to make it hallucinate, where it just makes up facts. SPLX provides the tools to test for and fix those kinds of vulnerabilities in your AI apps.
Got it. And Red Canary?
Red Canary is all about bringing in what they call agentic SecOps. It combines their AI agent technology with Zscaler's massive data lake to help build an AI-powered security operations center.
Automating threat detection and response.
Right. Reducing all that manual work for security analysts.
Now, analysts always get a little nervous about organic growth when acquisitions are in the mix. Did management say how much these deals contributed to the Q1 beat?
They were very direct about it. They said Red Canary's contribution was, and I'm quoting here, very, very small and not material to the results.
So the outperformance was driven by the core business.
That's what they said. It came from the strength of those 3 growth pillars we've been discussing.
Okay, that's good to clarify. But let's challenge one number that looked a little off. The non-GAAP gross margin. It was 79.9%, a slight dip from 80.6% last year. What's going on there?
That's a fair question. The CFO addressed it. He said it's a temporary and strategic outcome of how fast customers are adopting the new products.
So the AI and data security product.
Right. Those are optimized right now for speed to market, not for immediate margin efficiency. They want to grab that market share first.
So they're willing to take a small, short-term margin hit to win these new categories.
That seems to be the play. They expect the margins on those products will improve and normalize as they scale up, just like their core products already have.
That makes sense. Prioritizing the land and expand. Okay, now that we have the full picture on Q1, let's look ahead. What is Zscaler's formal guidance for Q2 and the full fiscal year?
Okay, so for the second quarter, they're guiding for revenue between $797 million and $799 million.
Which is about 23% year-over-year growth.
Correct. And non-GAAP EPS is expected to be between $0.89 and $0.90.
So that 23% growth for Q2 is a slight deceleration from the 26% we just saw. Are they just being conservative?
It's likely a bit of that. They do tend to guide conservatively,
Yeah.
but they also stress that they are investing aggressively right now to capture the market.
And what about the full year outlook?
For the full year, they're projecting ARR between $3.698 billion and $3.718 billion.
Okay, so that's growth of about 22.7% to 23.3%.
Exactly. And full year revenue is expected between $3.282 billion and $3.301 billion.
And how does that incredible profitability, that Rule of 78, how does that look in the full year guidance?
Still very strong. They're guiding full year free cash flow margin to be between 26% and 26.5%.
So while it's not the 52% we saw in Q1, maintaining FCF margins in the high 20s while growing over 20% is still, it's best in class.
Oh, absolutely. It's a testament to the power of their model.
You mentioned the SAP RISE migration earlier. How big of a deal is that in their long-term strategy?
I think it's arguably their most important long-term driver outside of AI. They said explicitly they're investing heavily to capture that migration from on-prem SAP to the cloud.
Because legacy security just doesn't work for it.
It just can't secure that new architecture. They see this as a multi-year, monumental shift that forces companies to modernize their security stack.
And the competitive landscape for their core products seems pretty stable. The real leverage is coming from expanding the platform.
Precisely. They're not just fighting small battles over the first sale. They're winning by displacing a ton of other point products with their platform, which saves customers money and makes deployment faster.
So to wrap this all up, the key takeaway is pretty clear. Zscaler put up a really strong quarter, growth at scale, and it was driven by these newer pillars, especially AI security, hitting its targets way ahead of schedule.
Yeah, and what's fascinating here is the evidence that enterprise security spending is really pivoting. It's all about integration, consolidation, and securing these new AI workloads. The confidence in moving away from old perimeter security to a zero-trust foundation is just. It's palpable in these results.
So a final thought for our listener.
I guess the question I'd leave you with is this. If this huge shift to cloud ERP, like SAP RISE, is creating this massive tailwind for security upgrades, what's next? What other legacy enterprise systems migrating to the cloud could unlock similar huge upgrade cycles in the next 1 to 2 years? That's the big prize that Zscaler and all its competitors are chasing.